Let's find out what's happening in Europe. We had Fitch coming out today and saying that, for all intents and purposes, we are seeing a default in Greek debt. Let's bring in Gabriel de Kock. He is a Forex strategist at Morgan Stanley. Gabriel de Kock, welcome to Surveillance Midday. You heard the news having to do with Fitch talking about Greece's debt rating. When you have a 2-year government debt trading at 25%, is that a default in everything but name?
Good day, Pimm. Yes, it does feel as if the market is clearly pricing a default. However, at Morgan Stanley, we think that that is not the correct attitude to take at this point. We think that an outright default or a restructuring of Greek debt is highly unlikely this year. And although we are not quite willing to rule out a reprofiling of Greek debt, we think that that is also still quite unlikely. I think it's very important to recognize that in the European context, what is happening to Greece and the potential for a restructuring depends crucially on political decisions, not just economic decisions. And I don't think the political decisions are being made in that direction right now.
What kinds of political decisions do you think are going to be made? We had Norway coming out this morning and saying that money that was earmarked for aid, a grant that was going to go to Greece for health services, that is being held up. You had the previous election of the True Finn party in Finland, and you have other countries in Europe voicing their concerns. You've studied a lot having to do with the German economy. What do you think their position is?
Clearly, if you listen to Ms. Merkel this week, she said that a restructuring is out of the question. When we looked at what's happening at the finance ministers' meeting this week, clearly the topic of a reprofiling of Greek debt has come up, and it was being discussed. But at this point, the Europeans are not ready to make that decision. And consequently, if you think about it, what it means for it in terms of FX markets, clearly, from my perspective, we have seen the euro take quite a pummeling today as a result of these headline stories about Greece. But we still believe that we should not focus on the headlines. You should focus on the bottom line, which is that these are political decisions. And consequently, looking over the next month or so, we are probably going to see the euro appreciate again. Consequently, I would like to say to people, be cautious right now, but be ready to establish long euro positions again. And in particular, I think, especially after this morning's news about Switzerland and the Hungarian Swiss-denominated mortgages, I think that taking a position in Euro Swissy, a long position, is an attractive trade at this stage.
All right, so go long the euro. If that's the case, what does that mean for commodity prices? Commodities denominated in dollars, does that mean that commodity prices increase?
I do believe that over the next few weeks, some of this uncertainty that we've seen out of the headlines will start to dissipate. You know, we've seen some soft numbers in the U.S. economic growth data. You know, Empire survey this week was quite weak, at least on the headline, if not on an ISM-weighted basis. But if you look through the data, we've had oil prices come down. You've seen that already reflected in what U.S. consumer confidence is looking like. We saw that in Michigan survey last week. And I think what the markets will see over the next month is that the economic data actually start to improve, and that will clearly put a floor under commodity prices in U.S. dollar terms.
Gabriel de Kock, we have your note, this having to do with have commodities lost their swing. It says the post-crisis surge in the correlation between currencies and commodities is fading toward pre-crisis levels, though the euro and, well, the oil are outliers. Explain a little bit about the commodity swing.
Yes, this is, if you look during the financial crisis, clearly the market was trading in a strict risk-off mode. And consequently, what you saw is that high beta currencies in particular were very highly correlated with commodities. Now, as the global economy is improving, there's a lot more looking at idiosyncratic risk with particular countries. And as a result, and also particular commodities, whether the supply conditions in those commodity markets are tight. So what we are seeing is that idiosyncratic risk is playing a more important role in both driving currencies and commodities. And consequently, you don't see this risk-on, risk-off trade sort of very one-dimensional that has been responsible for the high correlation between currencies and commodities.
Tell us about interest rates right now, particularly in the United States, Gabriel. We have no agreement on the debt ceiling, and those negotiations seem to be going nowhere.
In the near term, we still think that the market is focusing on the economic growth outlook. Because those numbers have been a touch weaker than anticipated, I think in the near term, interest rates are probably not heading anywhere until we see either stronger inflation numbers or stronger growth numbers. And, I don't think that's going to be the case for the next few weeks. At least that's a very strong conviction on our interest rate strategy team's part. In terms of the debt ceiling, our economists still believe that the debt ceiling eventually will be raised, and that it's simply a matter of time. Clearly, there's a lot of political posturing going on, but we at Morgan Stanley don't see that as a fundamental risk to the outlook in the near term.
Gabriel, final question for you. A report today of Chinese buying of gold and gold bullion, gold coins. Is that going to continue?
I do believe that China will continue to diversify its holdings across asset classes. And in times like this, it's clear that gold is an attractive alternative from their perspective.
All right. I want to thank you very much. Gabriel de Kock from Morgan Stanley, Forex strategist.